We've had the Bank of Japan, the FOMC, the Bank of England, the Reserve Bank of India. Bank of England moved, India moved. Bank of Japan didn't do anything, created a lot of volatility for basically tweaking the edges. You know, these central banks have a lot of power. Countries like China can move their currencies. Bank of China almost controls in many ways where equities are trading, and all of the central banks' money together affects all global markets. Is this something investors should be a little concerned about in the bigger picture, Vincent?
Oh, no question about it. First message is get used to it. The rest of the world is bigger. And the rest of the world doesn't act the same way it used to, i.e. the EM has a much bigger footprint than major currencies. Second thing is central banking is more complicated. They've got bigger balance sheets and they use forward guidance. Why'd the BOJ create ripples in markets during the week? It was forward guidance about their rate target. It wasn't anything they actually did. It wasn't anything they voted on. It was just forward guidance. And then the third thing you got to recognize is there are just so many different moving parts, and that emerging market economies act differently than major currencies with regard to their exchange rate arrangements.
So what is to be done? I personally think that, you know, the veil's been pierced. The credit crisis occurred. When you have a crisis, you throw all the rules to the wind and you try to deal with it. I get it. But now, are we ever going to be able to take these levers away? Is there any organization that could challenge or push back on some of these newly used policy powers without, you know, breaking the independent relationship between governments and their central banks?
Yes and no. When you do something, you set a precedent, it's very hard to go back. That the Federal Reserve doesn't like doing quantitative easing, but if we had a downturn, people would start calling for it to use QE. It would start manipulating its balance sheet once again. It's too tempting, if you've used a tool, not to use it again. The no part is, remember that the Federal Reserve is a creature of Congress. It is governed by the Federal Reserve Act. Its structure has changed over time. Congress and Dodd-Frank have told the Fed not to do some things it had done previously during the crisis, particularly with regard to the discount window. So we can put guardrails around central banks. And the other part to remember is central banks tend to travel in packs. Maybe Jay Powell toning down the statement, shortening it, making it simpler, talking more clearly, will kind of wean them away from forward guidance.